Welcome, everyone. It's Friday afternoon. I don't know about you, Steve, but this is going to be my last bit of work, I guess, or fun. And then, I might crack open one here. We're in the East Coast where it's actually hot and humid, but compared to the rest of the nation, it is ice cold, I would have to say. But welcome, everyone, to the financial markets recap for the week. Steve and I each Friday afternoon go through some strategies, applying our, I hate to say it, Steve, more than 50 years of experience between the two of us. Remember when we were young and like you had five and it was like, whoa, I have 5 years of experience. That looks good on a resume. But seriously, welcome to the show, Steve. How's your week been?
Week's been good, and yeah, when we started off, 3 decades ago, we lacked experience, and we felt that was a problem. And now we don't like having too much experience. So it just shows you never have. I guess, there's a sweet spot in the middle. But no, experience is a good thing, and I think when it comes, whether it's sports betting, sports handicapping, or the financial markets and trading and investing, experience is not a bad thing. I've always said the worst thing can happen is for someone to win their first like 18 parlay in sports, which is just a terrible bet because they're going to make them the rest of their lives. Same thing in the financial markets. I've heard many of the great investors say the best thing that happened to them was they, lost big early, and losing big early is probably 1% of what a loss would be now for them. So you definitely want to learn your lessons when it's more affordable and your bankroll is smaller because then you can grow it. I don't think it's ever worked the other way around. In fact, a lot of people have gotten lucky in sports and in financials, and then they've blown up because they were kind of riding on luck. So you have to be able to differentiate the two. And I think you and I have been doing this long enough now to know what works and what doesn't.
You brought back a trade from a long time ago. It was one of my first option trades I ever did was General Foods. And the veteran that was teaching me options markets told me to paper trade, and I couldn't stand it anymore. And I
Right.
put like 2,000 in, and all of a sudden, 2 days later, they were bought out, and it was a huge gain, especially for a young man. But to your point, I then puked all that gain, thinking that, well, this is easy.
Right.
I mean, you know, uh, even a caveman could do this type of thing, right?
You
But
know,
you're right.
Meb Faber has a great podcast, financial podcast. And he always, a lot of times, will ask the guests over the years. He used to say your most memorable, good and bad, I think, when he started, but now he'll just do like your most memorable trade or even financial moment. And it's funny because half the time it's a a winner, but a lot of times, I think the ones that are really sharp will tell a story like that about a loss early on, and you learn from it. And I'm a big believer in that. And it's I agree with paper trading, and I've kind of turned a little bit on that because I'm the type of person like I have paper traded, I back test and whatnot, but I learn so much faster when there's real skin in the game. So I've kind of changed from telling people to paper trade, which I did for years, and I think you probably would agree from what you were saying that you have to have a little bit of real skin in the game, just enough where it stings, to keep you focused because there's such a difference between on paper and even if you're just losing a few dollars. When people start to lose, and they've done studies on that. I mean, I think what is it like losing is like 1.5 times more painful than winning. I think there's some financial studies
Yeah.
on that. I think that's a very telling stat that you have to keep in mind about human nature.
Yeah, there's no doubt. I hate losing more than I enjoy winning.
I agree.
It's
I'm
just
the
the way
same
it is.
way. In fact, I know that, and that's why I'm careful, and that's why I develop methods, to not use that against myself because I learned that very early on, and I definitely fall into that role.
Yeah, and with the football season coming up, betting sentiment, the public sentiment is going to be huge. It's a huge weighting in my models, and I know you use it too. And you have a great show, Steve. Fade the Public, which, as I said last week, helped me immensely in I guess, the last two circuit contests. It has helped me confirm things that I was considering. So, when are you going to start doing those shows?
Yeah, we try to get them up on Friday evening into Saturday. But it's funny that you mentioned the contest because one thing I wish I had access to when I do them on Friday evenings is that contest data. And the Westgate puts it out. I don't know if the circuit. I think the circuit does put it out as well. The Westgate, but it's really hard, John, because the Westgate deadline was midnight Saturday night last year. They moved it later than ever, so you couldn't even get that info till Sunday. And even though there's some sharps like you and me in those contests, it's funny if you fade those consensus contest picks, you've done very well over the decades. So That's another layer I kind of been using. I'll do the videos, I'll do the work, and then I'll use that as an additional filter, like on Sunday mornings, because more times than not, you do not want to be on the general consensus side, and it's not because the public's wrong or the public's ignorant. It's first of all, the point spread, in general has to be balanced. So if everybody's on one side, you're by default getting some line value probably on the other side. And also the odds makers are generally not that off anymore with their opening numbers. So if everyone's jumping in against an opening number and moving it all week, you do get some buyback value. And it's the same thing in the financial markets. And you and I have talked about this the last few weeks. I think there's a lot of indicators you can use, but I've been trying to work even more recently and doing some back studies on trying to find undervalued or like not even undervalued, but things where nobody wants anything to do with the sentiment indicators, I guess. It's something we can talk about
Yeah.
because there's definitely some of the stock market, but I do a lot with trend following in the futures. I just can't find a good sentiment indicator in commodities, for example, because it's a zero sum. There's a buyer for every seller. So you can't look at, selling or buying because that's always going to equal out. I guess selling pressure maybe or buying pressure would be something. I mean, are there any indicators you can think of like in the commodity world that would show that type of thing?
Yeah, it's like it's the motivation why somebody's doing a trade.
Right.
So if it's in a commodity, then they bought corn, the price went down, and it's a panic type of sell, like oh my god, I'm not going to lose any more money. That's different than if you think fundamentally and based on what the charts are telling us, I'm bearish on corn or I'm bullish on corn. Those positions are the ones I like to track. The panic selling, panic buying really are kind of irrelevant because they're emotionally driven.
And I
So
think that's another reason why I pretty much at a minimum look at daily bars. And we were talking before the
yeah,
show, I've even started using more with the weeklies for that reason. Um, and especially closing prices, because once again, everything is kind of factored into the closing price on a daily basis, all that intraday craziness that you're talking about, that panic. But then I think the weekly bars take it even a step further because you've got 5 days of intraday craziness and panic. After 5 days, you're not going to see a lot of panic anymore. If it's still going down, that's probably a trend at that point. With that said, though, especially in equities, or I guess commodities as well, because it's sitting for a couple days, there's always that risk of holding over the weekend. So you can see some strange stuff with a weekly close based on that as well, I guess.
yeah, absolutely. And one thing, Steve, maybe I can invite myself on your show one week because what I've done is I've taken every single pick that was ever made in the Circa and the Westgate. And one of the things, as you know, is that when you get towards being in the hunt to cash, you have to kind of almost predict what the guys in front of you or the women in front of you, the entries in front of you are going to
Game
do.
theory.
Yeah. So what this algorithm does is that it assesses what the top 150, 200 entries have done, say in week 14, and then takes a look at the current card and comes up with a consensus prediction of what not only the whole community is going to bet on, but the ones that you have to jump over. And that's the most critical difference between actually betting to win money versus being in a contest where you're trying to win more than anybody else in the contest. But we can talk about that at in a later show too, because it's pretty fascinating. Last year was pretty good. It wasn't, it's never going to be a perfect science. That's for sure. I'll make that statement right now. Um, but I kind of see the same thing in this chart here, which is the S&P 500. And as you said, this is a daily chart. We set the high at 4609.25 2 days ago, and we were leaning on the bull side last Friday afternoon, but cautiously so. Yesterday was a pretty decent red candle there, as you can see, but not enough to get me to think that this trend is showing any signs of fatigue. Well, fatigue's not the word for it. I think it is a tired market, but not exhausted. What do you think for the week ahead, Steve?
Yeah, I mean, the trend is up, right? And there again, you have to have a really good reason to try to buck the trend. And if you look at this last several months here, and if you look at that near-term low right in the middle of the chart there really is two of them, right? There's one a little bit to the left there, and then the one a little bit more recent did not quite get back down to those initial lows. And then you see it's been a steady kind of consolidation period a couple months ago, and then it's been a steady trend up, and that's what is normally how it works. And just the S&P in general, something I was thinking about the other week when we did the show afterwards, like, I probably failed to mention is that the S&P has an upward bias. I did mention that, but I didn't mention exactly why. And I'm big on trend following, right? And trend following, the whole thing is keep your losses minimal and then let your winners run. The S&P index, the reason it works and the reason people have made money for decades just having it in their retirement account and setting it and forgetting it is because it basically is trend following. And I always find it humorous that the people that knock trend following or the stock pickers, the S&P 500 index is a trend following index. And the reason I say that is because it is not equally weighted. The ones that are doing better get a higher rating. And what was it? I saw about a week or two ago. I think the top five are like still 20% overall, the 500. The bottom 490 make up hardly any of it still. I mean, you're talking about Apple, Facebook, Google, the
Yep.
powerhouse companies, Tesla, they continue to dominate. So, and that's not a fluke. So once again, you're letting your winners run and those companies continue to do well. And, at some point, you're going to probably say they're overvalued. Tesla had earnings the other day. But, Tesla's a battery company. They're not really just a car company. They're a battery company. They're going to probably be an AI company along with Apple. And that's the next horizon is AI. So if Apple and Tesla and Google, those are probably the companies you want to bet on in that industry. They're going to continue to grow. So it's really not about the economy. It's not about lower class people that are probably struggling right now with inflation. It's about, wealthier investors have their money in the S&P and those companies continue to do well and they dominate the S&P and the trend is definitely up.
This is Tesla. I have some Fibonacci things in there from an ancient chart. So just avoid the white lines for now. But this little triangle with the gold lines is a little bit of concern with Tesla
That's right
because
after the
it's
earnings,
obviously
right?
broken
Because that's
down
like 3
through it.
days ago when it broke through that
Yeah.
trend line. Yeah.
So we'll have to keep an eye on that. But it's got a bullish hammer today, and folks that don't know what a hammer is in candlesticks, just take a look at today's action. Looks like a hammer, right? And the fact that it's trading above the opening price today is what makes it green. And all that price action below the hammer itself, the stem as we call it, that's all solid support now. So this might be just a little hiccup, much like we saw right in here, where it looks, oh boy, it looks like Tesla's going to go down hard, but then it immediately finds buyers. I don't think this stock is anywhere close to being in a bear trend anytime soon. But great point that you brought it up. And then here's Apple. Um, I'm surprised that our political leaders don't take credit for the job creation at Apple either. Of course, I'm saying that tongue in cheek. You can't see my face, but I'm laughing. But Apple is obviously a $3 trillion company market cap.
But I mean, John, look at that. That
190.
almost looks identical to the S&P chart that you put up, right?
Yep.
Because they're the most dominant company in the S&P right now. And I mean, it really is like coming down to you're really just handicapping like five companies if you want to predict where the S&P is going, in my opinion.
Yeah, and that's a great point. But is that a concern that the market breadth is not broad right now? Do you find
Yes.
any negativity with that?
Yeah, and that's exactly what we've talked about. Like I keep saying something's not right, right? When eggs go from $1 to $5 back to $1 in a year, when mortgage rates go from 3% to 6% in 3 months last year, when rates were zero and go up to 5 or 6%, that's not normal. And I still think there's a lot of things wrong in the economy. But then again, you start looking at who's really invested in the S&P 500. Once again, it's like the bottom 50% of the countries aren't invested at all. So it's like they can be struggling, the economy can be bad, and it doesn't mean people aren't still investing. So I think there's a complete disconnect. And that's what's strange to me. Like I don't like the underlying things that are going on in the economy. I still think there's some problems. Yet that doesn't mean the S&P 500 is not going to continue to rise. It's almost like it's two different stories.
It's like trying to fade the Baltimore Orioles.
Yeah, exactly.
You figure that it can't keep going on, and the Atlanta Braves are another team that's a juggernaut that just keeps winning and winning and winning week after week after week. And you try to figure out when that's going to kind of halt because it is abnormal. Or worse yet, you try to figure out what's wrong with the Mets or what's wrong with the Yankees, and that's a pretty easy answer. You just don't buy those stocks by analogy. You just avoid them until things get clearer.
But one thing
Uh,
I'll say about that is that if you look deeper, like the Braves and the Orioles, their numbers are solid, right? They're legit.
yep.
Like they're offensive, they're bullpen. It's like they're doing things right. And you look at the Yankees. In fact, when Judge was out like a month ago for the month of June, during that spell, they were the worst offensive team in baseball. They were dead last, 30th in numerous categories, even behind the A's. So like the Yankees, if they didn't have the name Yankees on their jersey and Judge wasn't, such a star, people wouldn't be thinking of them. And the Mets are probably the same way because, once again, another New York team. So I guess you kind of have to get under the hood. And the question becomes, does Apple, does Tesla, do they really deserve to be priced like this? And obviously they're great companies and they have been. But then you start thinking like, if AI, if artificial intelligence is the next frontier, like they're probably better positioned than anybody to run with that. They could really remain juggernauts for that reason.
Absolutely. Agree 100%. And this is your one of your favorite commodities, natural
Yes,
gas.
natural gas. I know by just looking at the chart.
Yeah, yeah. I mean, it's very unique. Natural gas peaked at 10 back in here, and now it's been levitating between 2 and 3. Last week we were talking about being buyers at on approaches. I think it was what 233, which we didn't get because we did highlight this candle here, which is a bullish candle. That was last. I think that occurred last. Yeah, that occurred last week. So and never got really close to 233, which is the price that we were targeting. But still, if I highlight the last couple of days here, now this chart looks completely different, but that's
Right.
just taking the last like month, and it's still a daily bar. But now you can really see the patterns. So you get up near 285, you get those bearish engulfing candles like this one,
Yep.
and then you get a bunch of other stuff. But you think maybe we're fine tuning the entry level too precisely, and we ought to take a bigger,
Yeah.
longer term view that okay, if it's 271 right now, and we think it's going to 4, why not buy it now?
I mean, I think it could definitely be in a consolidate. What it is in a consolidation channel for several months. This is what we talked about Bitcoin. Bitcoin had the monster move up, the monster move down, and then it's really consolidated for the most part for months. And natural gas as well had the big move up, and then of course the big move down as we just saw. And it has been consolidating. That's normally what happens. I still think long term, the risk reward of just buying at any point right now is very good because I really don't see it going lower than those bottoms from a couple months ago. And this isn't a stock. It can't go to zero. You have to have natural gas. So it's
Right.
hard to imagine it can get below two. I mean, it's just cost wise, that just doesn't make sense. So, and we saw, as you said, it was as high as 10. There's some chaos with Ukraine, and the fact the war's still going on and it's so low still is a little strange to me. Um,
It
but it
is.
also, if you look at just this one you have up now, the more near term picture, kind of a trees within the forest approach, you could see that it's not gotten near those recent lows to the left there. It got a little less low and it's been going higher. Yet it did take out the high from a few weeks back. And I agree with you. That one candle about 2 weeks ago, that engulfing big one that you pointed out, that's the top, and it hasn't reached it. There's been some other spikes up near that. So maybe that is the ceiling. So, two ways to look at it. You probably don't want to necessarily buy right now near the ceiling. If it's in a channel, it's going to keep dropping between 2 and 3 for months, maybe. But if we do see an extended breakout from that top range and then it holds for a day or two, that would probably be a great entry. I know it's a little bit higher, but that actually would probably end up
Yeah.
being support at that point.
Yeah, I just noticed that bearish engulfing candle is basically a 10% move from high to low. So even though
Yeah.
it's trading between 2 and 3, don't think for a second it's like a penny stock. And um, moves like this with the leverage involved with futures contracts has enormous dollar movements both up and down. That can adversely impact you. So you have to make sure that you're comfortable with the volatility before you even enter the trade. So
And look at the end of last week. I mean, that you had those red candles going down for three in a row, almost two dojis there, and extended tails, and then a pretty
yeah,
two big green candles up after 3 days after that. Um, that's around 2.5 there. I would say 2.5 definitely looks like long term support. So yeah, I don't think we're going to get an entry below that anytime soon. Um, you can really go in at any point right now at 2.7, 2.8. Set a stop at 2.4. with unlimited potential to the upside, and you're risking only about point 0.3. That's why I keep saying the risk reward on
Yeah.
this looks really good no matter when you get in.
Yep. I'll jot that down the notes to recap for next week too. And then one that I look at, I haven't traded it in a long time, is high grade copper. Correlates very well with the economic climate because what is copper used for? It's used in everything imaginable when you're doing new construction, new. There's not too many office buildings being built right now, and that's a whole nother topic.
Right.
But high grade copper is used in all expansionary type of activities. So, this is telling me that, inflation is not the problem that the media would lead you to believe. Yes, the Fed may tighten a little bit more. It'll be tweaking, maybe 25 here, 25 there, but the massive moves up, I think, are completed. And quickly, crude oil is another one. If you look around your home, just about everything you're looking at is oil based. It's somewhere along the line, oil was involved with it. Plastics, for example, are all oil based. So this is, again, it was 130 some bucks a barrel, and now we're trading 77, and it's kind of stuck in a range between the low 80s and basically the high to mid 60s. And if anything, I do think when we get into the winter months, the demand for oil is going to go down. Heating oil will go up a little bit in price, but again, it's very affordable right now for heating oil. Basically, $3 a gallon, depending on the state you live in. Um, so I don't see any pressures there at all. Which again, that's supportive of the stock market going even higher. But I know you have to get going, Steve. So I wanted to get your final thoughts here, and then anything else you want to share with the folks, sports betting wise this weekend, or any big plays you might have going tonight or the weekend. And, the stage is yours.
No, thanks, John. It's always great to talk to you. I think crude oil also could be kind of in a consolidation at this point, right? I mean, this is another one that was almost down to zero in that near month contract during COVID, and then went over 100, like you said. So when you see a crazy down move and a crazy up move, like natural gas had as well, you normally get a lot of and Bitcoin, as I mentioned. Then there's often just no trend at all, and it's just a sideways channel. And this, although this is trending lower, you could see that, right? So if you're trying to say which way is the trend right now, it is lower, and you don't want to buck the trend. So I'd say you probably want to find a reason to sell, and if you see those recent spikes up, they usually drop after that. So it does appear to be heading down that way. Did the baseball show just before this at Wager Talk TV. That's on Wager Talk TV on YouTube right now. Those are all night games, so some great free information for baseball. And then I've got two best bets tonight as well at wagertalk.com, and we have a 99 rest of July special the next 11 days and nights for just $99. That's $9 a day for all my best bets. Steve Merril, wagertalk.com. You can follow me on Twitter at Steve Merril, 2 R's, 1 L, Merril, at Steve Merril on Twitter.
That's awesome. I have a pretty big card myself going this evening in 3 Major League Baseball picks. I've been running 19-7 in baseball at winningcappers.net and the Predictive Playbook and a few other sites. I'm ranked number 1 in CFL and WNBA. So, I humbly state that Steve and I have done pretty darn well perennially. We do have our moments where we go on losing streaks, and we will admit that. We'll be accountable for losing 7 in a row. I lost 7 baseball picks in April consecutively, and it happens. Like I like saying, Steve, sometimes you're the dog and sometimes you're the fire hydrant. And when you're the fire hydrant, you just got to take a day at a time and know that you're going to be the dog someday. It's as simple as that.
Well, I think
But
too, when
yeah,
people understand math, it's we're not coin flips. We have an edge on every player we release, and we have an edge in every trade, but it might only be a 55, 56% edge. It means there's a 44% chance you're not going to win. But just take a coin, 50-50 coin. You can flip it. Just go there and flip it hundreds of times. You're going to have runs of 5 or 7 one way, 5 or 7 the other. So when you're talking about 56, 58% advantage, you're going to still have some runs going the other way. It's just variance. So it's not even running hot or cold. It's just variance. And I know most people don't look at it that way, but that's another reason sports betting and financial investing and trade are so similar.
yeah, and I have nothing against the Tampa Bay Rays, but it's a great point. Just because the Rays are on what is it now, a 7-game losing streak or whatever it is, 5 or 6, doesn't mean that they're due to win.
Oh
It
yeah.
does not mean that, oh, they're a great team. They're going to win tonight, or the Yankees playing the Royals tonight, for example. Just because the Yankees are playing the Royals doesn't mean the great Yankees, who are not a good team, by the way, in my opinion, are going to win. And that's human nature to think that Tampa Bay is going to win tonight, and they might. But one of my plays is on the Orioles again tonight, and I've been fading the Rays. And just like the trend is your friend, and the trend right now is negative for the Rays. And until they correct and fix what they're going on, it's not going to be a bet on situation. A month from now, I might be bullish as all get out on Tampa Bay, just like Steve might be. So I think that's a very important lesson to learn. That we're investing in numbers. When you really get down to it, we're betting on numbers and situations, not mascots. And so many of my friends, they have a favorite team and they bet on that favorite team, Steve. And you know what happens? They lose and they take it so personally, like the team was trying to screw them out of the money. Like, those dirt bags lost and cost me $200. I'm never betting on them again. That's not how you do this professionally.
Yeah, well, I've always joked that since I've been doing this for 27 years, I don't really have favorite teams anymore. And then someone will say, "Do you have a favorite team?" I say, "Yes, but they change on a daily basis. Changes every
Yeah,
3 hours."
yeah, it's exactly right. And lastly, before I let you go, Steve, the British Open is called the Open now, of course. And I was studying this, and as you know, I do a lot of golf stuff in DFS, and they revamped the 17th hole, and it's played 124 yards yesterday. And you would think that even for a guy like me that loves to play golf and has played for a long, long time, that's an easy hole. That's an easy par three. Well, there was a couple sevens recorded on that hole yesterday. It played over par, and if you do anything this weekend, you're bored and you don't want to know what to watch because there's no football yet, turn on the TV in the morning because it'll be on. It starts at I guess it'll start like 4:30 in the morning Eastern Standard Time. And when they get to 17, with the wind that is going to be present over the next 2 days, it's going to be a nightmare.
I'll have to
Brian
check
Harman's
that
at
out
10
because
under
yeah,
right
I
now.
don't watch a lot of golf, but I appreciate it. And yeah, when you said 120 some yards, I just know how they do the rough, they do the traps and the water and everything else they'll have on those courses. I'm intrigued now to hear about sevens on a 124-yard professional hole.
Well, and 18 has had the most double bogeys or more of any par five on the PGA Tour this year.
Wow.
The most before was 13 in one hole, one event. Okay, this one already 18 has already 20 such occurrences. Justin Thomas yesterday took a 9 on this par five. Terrell Hatton was tied for seventh today going into the last hole. He too took a 9.
Yeah, but how exciting is that going to be on the final day when nothing is going to be, no lead will be safe or out of reach because it's a par five, so you can always catch up. But then again, no lead will be safe if there's the possibility of taking a quadruple bogey. Yeah, that's good
Yeah, I
stuff.
mean it's
I'll have to
filled with
set the
danger,
DVR
and
to catch that.
there was already 2 eagles on that hole today. So
Right,
to
because
your
it can
point,
go either way. That's what I'm thinking. I mean,
yep.
a par five is great on the final hole because the guys are so good. They usually tear up par fives. Now, everyone's a par three. The only way you get a double eagle is a hole in one, even if you're a pro. But they can do double eagles on a par five. They can make threes, So that's a really cool setup to have a tempting par three and then a par five that can go either way as the last two holes. I love that design, and that's great. That's made for great TV. I'll have to check that out.
And some live in-game betting, like when
Yeah,
you think a guy that's coming up, say he's two behind and he's playing 2 holes ahead of the leaders who are the last group of the day. The 14th hole would probably be the best hole to take them and bet them, assuming that they're going to get a birdie, maybe on the par five, and they're going to birdie or eagle 18, and they're going to par the 17th.
right.
But that, I'm telling you, the 17th has been equally the fun for me to watch this tournament as the TPC Sawgrass Players Championship. That's how intense this hole is.
I'll check it out. I appreciate the heads up because I probably would not have thought because it is on so early. I forget it's even going on, and I probably would not have run into it otherwise. So I'm gonna have to check it out.
Breakfast in Liverpool.
There's worse things.
Anyway, Steve, I know you have to get going. I'll let you go here. Thanks for everybody watching this, and we'll be back again next Friday with another edition of this show. And until then, remember always to bet and invest with your heads and not over it. And may all the wins be yours. Have a great weekend.